there are ways to nudge that rate closer to 6.5% or even 6%. One common technique is to pay for discount points. Each point usually costs 1% of the loan amount and can lower your interest rate by about 1/4%, though this varies depending on the lender. So if you're aiming for a 0.5% drop from 7% to 6.5%, you might need to buy 2 points, which on a $300,000 loan could cost around $6,000. Bringing the rate down to 6% could require more points, and the price tag goes up accordingly. So make sure you have enough cash on hand and weigh whether the long-term savings will justify the upfront costs. Another approach is to request seller concessions in the sales contract. If the property has been on the market for a while or the seller is motivated to close, they may agree to pay some of your closing costs, allowing you to redirect that cash to buy down the interest rate. When drafting your offer, be clear and specific. If paying the points up front isn't an option, you might explore a temporary rate buy down, such as a 2-to-1 buy down. In this scenario, your rate is reduced by 2% for the first year, then 1% for the second year before landing at the full rate. It creates a bit of breathing room initially, though you'll want to budget for higher payments later on. Some buyers plan to refinance if interest rates drop within that time frame. Speaking of refinancing, it's a route many take once rates move lower. Of course, there's no guarantee rates will fall, so see it as a bonus opportunity rather than a sure thing. Improving your credit score before applying for a mortgage is another practical way to secure a more favorable interest rate, sometimes shaving off a few tenths of a point. Even if you can't knock your 7% rate down too far, cutting out mortgage insurance by putting at least 20% down can lessen your monthly outflow by a lot in some cases. In the end, the goal is to explore every angle: seller credits, discount points, buy down programs, and boosting your credit score so that you can lock in the best deal possible in your real estate market.